a little bit in the green, not able to hold the highs, you will have to say. Even 8366 now, it couldn't hold 8380. That was the kind of highs it tried to open at, but still in the green. The Bank Nifty as well. Actually, all the indices have given up from their early morning gains, so we'll have to wait and see whether the market has legs to stand in the green. On that and other questions, let's welcome our market master for the morning, Jitendra Sriram, Managing Director and Head of Research at HSBC India, joins us. Good morning, Jitendra. Good to have you with us because so many questions cloud investors today. How deep is this global deflation scare? Do you think it can hit the equities yet again and take us maybe even below 8,000?
Overall, I think the pressures on deflation remain very, very real because you're seeing both sides, whether it's the hard commodities, the metals pack, and also the soft commodities, the agricultural prices, both trade at near, multi-year lows now. So to that extent, I would definitely argue that the threat of deflation kicking in is pretty much there. To add, you have this whole issue about the recent data coming out of China, like the PMI data, etc., not matching up to investor expectations. And as a result of that, I would definitely expect that this big growth engine for the world, which has been China thus far, might cause some kind of growth scares as well. I think it's a very real possibility that you could see markets drift down a little from here. Our year-end target, as I mentioned earlier as well, is close to about 26,900 for the year-end. So it implies an absolute downside from these levels right now.
Oh, okay.
Okay. 26,900 for the end of the year. That's the Sensex target. Jitendra, hi, good morning. You know, the India dedicated funds have been pulling out money in the last couple of weeks. Do you see that trend continue?
Well, it's a difficult one to argue from a short-term perspective. The reason being that in the short term, you might see, for India dedicated portfolio, I guess it is totally going to be linked to the kind of inflows and outflows you see from a global sentiment perspective because they are effectively wedded to the market. So it's not about shuffling the decks in terms of which country to allocate more or less. So I would say that, the bigger determinants there would be stuff like if and when the US does decide to hike rates, you could see some flight of capital away from the emerging markets into back into the US. And as a result, you might have those implications fallen. When I look at the Asia ex-Japan pack, the Asia EM pack, I would argue that there probably you could see a short-term, probably a small lift up because people might shuffle out of a little bit out of, the other markets into India, given the relative resilience of this market. But again, longer term China growth scares will be the bigger factor to weigh in on this entire pack as such.
Okay. Well, at this point in time, the markets have dipped into the red. It's not a great deal, but the early morning 0.33% gain that we saw on the Sensex and the Nifty has not been able to hold. So we are racing towards the 8350 mark on the Nifty, just minus 1 or 2 points at this juncture. Not serious, but important that gains are not being held after first 15-20 minutes. The Bank Nifty also is fast slipping into the flat terrain. It's still marginally in the red, marginally in the green. And among the stocks that are falling are Axis Bank. That's seen a fairly rapid sell-off. As well, you're seeing selling coming in the likes of IndusInd Bank, though ICICI is still holding in the green and keeping the index more in green and flat terrain. Jitendra, if the markets do go towards that 26,000 mark that you think they're headed, what would be the relative outperformers in the Nifty?
Well, I would definitely expect that at this point of time, the energy sector could be one to do well because it is a little bit decoupled from prices given the whole bogey of subsidies that we used to suffer from. So to the extent that there is a price carnage, there is an offsetting element coming through from subsidy, and it's actually helping the macro get a lot cleaner for the sector, lower working capital intensity, the fact that you are actually seeing the borrowing levels starting to come off, accruals starting to pick up, the companies, the names in the sector starting to reflect genuine refining and marketing margins rather than some pain of subsidies and some random black box number coming out at the end of every quarter. So that is one space that we clearly like. The other I would probably argue is like the telecom sector, where data is clearly showing some traction. So that would be areas that will definitely be at play. Of course, apart from the standard local plays like whether it's consumer durables or staples, which could see some interest. Right now, it's a little bit of a tough market in a sense that you might have the capex recovery is still a little time away. So you're still seeing disappointments come through on the earnings season. And on the other end, you have the exporting segments, which are showing either signs of weaker growth, which is in tech, or in pharmaceuticals, where you're seeing definitely some more pain points there, because most of the numbers thus far have disappointed.
Okay. In terms of earnings, today, Jitendra, Maruti will be the one in focus. You have a buy call on that stock, I mean, similar to everyone else in the market, but your bull case is 6,400 in the next 2 years. What could be the triggers for that? Don't you think a lot of the good news has already played out?
Well, yes, in a sense, one part of the story, which is, the fact that there has been a earnings recovery from where it was 2-3 years back, has definitely started playing out. But do remember that the baseline for Maruti through 2-3 years was labor unrest, it was production disruption and various other things that have started, that had kicked in its plants some time back. And that was a one-time rectification of those pains. Now, what we are seeing from Maruti is that there are two levers which are kicking in. One, a softer yen is obviously impacting the import bill favorably for Maruti, which is all the critical components sourced from its parent Suzuki, which is leading to a margin uptick. The second part is an entry from Maruti into various interesting spaces. Up till now, it was basically a mainstay in the B segment car market. Now we are seeing a lot of interesting product launches starting to come through in hitherto nascent segments for Maruti, which is like the SUV space, the the multi-utility vehicles segments. The fact that it is upgrading its product slate, and in case that bull market is premised that if their models are indeed successful in these niches, then it could actually mean a lot more for Maruti, both in terms of top line market share and in terms of also the premiumization of the product slate. And that is what that bull case captures.
Okay. Jitendra, what about the banks? I remember you saying that you're positive on some of the housing lenders, and you had ICICI also as a buy on your list. Lately, of course, the bad loan problem is troubling even the private sector banks. Where do you stand on ICICI, Axis? Well,
in the private sector, our top name, which is part of our Asia Super 10, is HDFC Bank, which is obviously a lot about much more pristine asset quality, because as you rightly put it, asset quality remains a concern for most banks. And the fact is, the longer that recovery is elusive, I guess the cancer will spread. It is already extremely evident in the state-owned banks at this point of time. My suspicion is if you have a few more quarters, some part of it will spill over even to the private banks. You could be very smart in lending practices, you could be great in appraisals and stuff, but the endemic problem of the sector will reflect eventually. So it will spill over. So I would suspect that one needs to be fairly selective even in the private banks. So either it has to be something where asset quality is very comfortable, which could be the names like an HDFC Bank or a Kotak or something like a mortgage lender like HDFC. Or alternatively, it has to have the support of valuations wherein we like a name like an ICICI or a Yes, and some specific pockets like that. But by and large, I would say that one needs to be very selective in the private bank space as well now.
Okay, one space that you've liked for a while is the whole agrochemical sector, and there we've seen substantial gains, in names like United Phosphorus, etc. What incremental trigger do you see over there, and what are your top picks in that space?
Well, most of that sector is definitely looking very appealing. Not only are you seeing, expansion of, the quantity of crops that are coming through from various companies, like they're expanding beyond, say, a cotton to a maize or a certain other cash crops in the marketplace. The second part which is happening is that you are also seeing geographical expansion in terms of states. So there's a lot more states who are more amenable to having hybrid seeds and stuff being planted and so on. So that's leading to the growth profile coming in. So by and large, I would argue that most of the names look appealing, but in terms of a relative pecking order, clearly UFOS is one name that we like. We also like PI Industries on the back of this. So these would be probably some of the names that are preferred over the basic pack there.
Okay. How are you placed in the pharmaceutical space at all? Some big boys have taken a beating like Sun and Lupin.
Again, a case of being selective there, because although I must confess that some part of what is happening in the marketplace as a result of FDA violations or 483 observation stuff is very, very difficult to predict, and it is actually shooting in the dark. But I would probably say that Sun, clearly, given the kind of price carnage that it has seen, we are constructive on that name.
Okay.
Cipla is another name that appeals to us. Torrent Pharma is another name that is looking quite appealing, because you've already seen the pains last year with relation to the acquisition of Elder Pharma's product slate, and we are now seeing operating leverage levers starting to play out as they're able to raise utilization levels on the acquired portfolio. Plus, there is obviously a trigger coming through from the generic drug Abilify.
Oh yes, that stock has hit a fresh high today, post its numbers. Thanks, Jitendra, for stopping by and speaking with us.